Hi, everyone. Welcome to this week's market update. I'm here with Eric Anderson. Eric, this week's market action has been filled with conflicting signals. What's the bigger picture here?
The big picture? Divergence and disruption. We're seeing fractures not just in sectors or regions, but across the foundations of the global economy. The S&P 500 managed to claw back some ground this week, helped by consumer staples and a bit of a bounce in energy. But look at the Dow. It finished in the red. And why? Because healthcare, a sector we all used to think of as bulletproof, just buckled. United Healthcare missed earnings. First time in over a decade. That's not just a miss, it's a message. A 22% plunge in one of the most reliable stocks on the board? That tells you something deeper is shifting. Cost pressures, regulatory fears, and a real sense that the old safe havens aren't so safe anymore.
There's clearly a political undertone to the volatility. What's going on with Trump and the Fed now?
Oh, it's not even undertone anymore. It's blaring from the loudspeakers. President Trump took direct aim at Fed Chair Jerome Powell this week, saying his termination can't come fast enough. Now, let's just pause on that. For decades, markets have leaned on the idea that central banks are independent, that monetary policy is shielded from political chaos, and Trump's basically lighting a match under that idea. What happens if that trust unravels? The dollar crumbles, and we're close to that now. Consensus is building that the dollar index could drop another 10%. If that floor gives way, the ripple effects could be massive, from global bond markets to commodity pricing. This isn't just jawboning, it's institutional erosion.
And what about China? Tariffs, shipping levies? It's been a roller coaster.
Yes, and there's a curious twist. Trump, for once, eased off, slightly. He moderated the levies on Chinese-built ships using U.S. ports, but even the so-called moderation adds to inflation. We're talking $50 per net ton, rising by $30 per year for 3 years. And let's remember, China controls half the world's shipping fleet and 95% of its containers. So it's not a small tweak. It's a cost shock on a global scale. That said, the tone on China has shifted a touch. We're seeing a bit more pragmatism emerge. Trump's quote on tariffs this week was surprisingly measured. So maybe, just maybe, there's room for de-escalation. But don't hold your breath. This is a geopolitical chess game, and we're only halfway through the opening moves.
Let's talk inflation. Powell's comments this week seemed particularly worried. What's the Fed's playbook now?
Powell is trying to walk a tightrope, and the wind is picking up. He's flagged the danger of inflation expectations drifting higher, and that's exactly what we're seeing. Surveys are coming in hot. Households now expect inflation to hit 5%, and that's before most of the new tariffs even bite, so the market's pricing in 100 basis points of Fed cuts, but not until next March. That's an eternity in market time. Between now and then, it's going to be all about managing perception. Powell doesn't want to cut prematurely, but he's under growing pressure to do something, anything, to stabilize the narrative. The risk? If they wait too long, the inflation genie escapes. If they act too soon, they lose credibility. It's a no-win situation.
We've seen some global policy shifts too. What's your take on the international response to all this?
Honestly, the world is quietly moving on from the US. Let's take Japan. Their equity market actually rallied this week on hopes of a trade deal with the US, a bit of optimism in an otherwise murky backdrop. Meanwhile, their government pension fund is reportedly divesting from Chinese equities. That's not just a portfolio move, it's a geopolitical statement. And then there's India. Inflation came in at a 6-year low, 3.34%. That opens the door for rate cuts by the Reserve Bank of India, and it's one of the few positive stories in an otherwise gloomy global growth narrative. But globally, the tone is clear. Countries are recalibrating, rerouting trade, redefining alliances, and reducing reliance on U.S. stability.
That's it for this week. Stay tuned for more insights next time.